Hello and welcome. Today is Wednesday, February 11th, and this is your Daily Sigh of Relief. I am demonstrably sick, and yet here I am attempting to fulfill upon my commitments. So, here we go. Bear with me. Do me the courtesy of pretending that I don't sound like Vincent D'Onofrio in that Denzel Washington Western. If you get that reference, by the way, well done. Good for you. I'm proud. If you're an entrepreneur trying to keep up with what actually matters, this is for you. I go live every business day at 6 p.m. Eastern, and to the best of my abilities, I give you everything that I think matters in the entrepreneurial world across business, AI, markets, platforms, and policies, all in 15 minutes or less. So, if you want the news of the day in 15 minutes or less, tune in every single day at 6 p.m. Eastern, or you can get the Daily Sigh directly to your inbox by going to dailysigh.ai. Let's dive in. First, some bad news. From Reuters, the U.S. employment growth revised down by almost 1 million jobs. The official record has been corrected to show a much weaker labor market than previously reported, signaling that the resilient economy narrative was inaccurate. Hashtag shocker. Wonder if that was on purpose. It's interesting because this is horrible news for employees, obviously, but I actually think it's really good news for entrepreneurs. We're looking at a market that is indexing towards the deliverable, not the hourly. And for at least the short term, I think that there's a lot that we can do there from an arbitrage perspective. This suggests consumer demand may be cooling, and your 2026 growth assumption should be stress tested for a soft economic environment. So says Reuters. And I think that they're saying that because if the job market is down, so too is the consumer market. What's interesting about that is, I realize why historically those levers have been considered to be connected. And the last two cycles, that hasn't necessarily been true. And number one. Number two, it also really depends on who you sell to. There's a weird juxtaposition here because there's a cooling employment market, but there's also still a war for talent. And a lot of employers are opting, instead of training their talent, they're firing and hiring anew, or firing 10 and hiring one. A recommendation I have for small businesses before you start looking at firing and layoffs is training up. I think a motivated generalist is more valuable than a specialist at the moment, because if you train, you're going to have to train again and train again. And so finding somebody who's trainable could be preferable. Incidentally, we own a free forever vibe coding incubator. So if you want somebody to learn vibe coding, send them to vcinc.ai. From TechCrunch, former GitHub CEO raises $60 million for an AI development tool. Speaking of, capital is flooding into, quote, second order AI problems. This startup, called Entire, focuses on managing the massive volume of code generated by AI agents rather than creating AI itself. They have a $300 million valuation. I love these valuations. We have a $300 million valuation. If you're pre-money, you ain't worth shit, dude. It's all made up, by the way. It's so funny that, like, the deeper you dive into that and the more you study it, the more you realize this is all made up. It's the best guess as to what people might be able to, or willing to invest at. The $300 million valuation for a seed stage company demonstrates that the market sees immense value in solving the operational headache and technical debt created by rapid AI adoption. So saith TechCrunch. This is one of those problems that they're solving before people know it's a problem. So we'll see how far this goes. I will say AI output overwhelm is real. Whether or not we need another AI tool to solve it is, I think, has yet to be seen. But if you haven't experienced that, you're not using AI well enough. From Fortune, Anthropic and OpenAI agents challenge SaaS seat-based models. Thank God. Death to SaaS. Hashtag. I own that domain name, by the way. New autonomous agents are automating workflows that previously required human seats, putting immense pressure on traditional SaaS incumbents like Salesforce. Salesforce also just laid off a bunch of people, if you were tuning into the Daily Sigh yesterday. The interesting thing about the death to SaaS model is the average small business has something like 180 different software products that they pay for. 180, or approaching that number. And y'all, so many of the features and functionality that you rely on with those applications can already be done in-app by these AI tools, especially things like Claude Cowork and some of these agentic tools. So this SaaS apocalypse is very, very real. As a matter of fact, if you just spent a day, if you're a small business owner and you spend a day going through your SaaS tech stack, bet money you could, I don't know, half truly, really, no hyperbole. Half of the things you're paying for, you could cut out right now. And the other half, you could probably build yourself if you went to a lovable workshop. From Market Watch, new AI tool for tax strategy sparks sell-off in wealth management stocks. Altruist's new AI tool automates complex, high-value professional services like personalized tax strategy, causing immediate market concern for traditional financial advisors. This one kind of tickles me pink, to be honest with you, because I don't know that the traditional financial advisors they've never beat the market, ever, ever, ever. So the fact that this market exists, it makes me think that this isn't a hierarchical structure. It's not a meritocracy. So why is this new AI tool any different than anything else? I think traditional financial advisors exist because they're really, really good salespeople. Founders in regulated industries must rapidly integrate AI or risk being disrupted by automated device platforms that offer higher efficiency at lower costs. So saith Market Watch. I agree. KiteWorks has a story. It's interesting. California AI transparency law takes effect. If you are in California, they're always first, man. Goes to the Europeans and then the Californians. The Europeans and Californians have a lot in common, actually. They all drink wine at lunch and have just a blatant disregard for progress. New laws effective January 2026 require explicit disclosure for generative AI content impacting every marketing and SaaS firm operating in the state. Failure to comply results in significant fines and loss of consumer trust. I can see why failure to comply results in significant fines. I don't know if it results in loss of consumer trust. I feel like they're sort of going off on a limb on that one. Entrepreneurs must audit their content generation process immediately to ensure disclosure protocols are in place. This is going to be worldwide. The entire nation of India has already developed laws around this. I'm sure the Europeans are going to follow suit. AI disclosure is going to be a thing and needs to be. And I don't even mean that from a transparency perspective. It's from a functional perspective. We need to know. There's going to be a whole slew of ambulance chasing attorneys focusing on this, by the way, so be ready for that. The regulatory environment for AI is shifting from wait and see to active enforcement as major markets like California and India set the standard. Global compliance will become a baseline requirement for doing business. Yes. Thank you, KiteWorks. Good story. Some smaller stories, quick rapid fire from Reuters. Siemens Energy profit soars on AI power demand. Y'all, if the shovels in the gold rush are power, we're power starved, we're compute starved. So it's microchips and power. Interestingly, the historic connection between gold and oil has been 1 ounce of gold for 20 barrels of oil. Right now, we're at 1 ounce of gold, I think, for 80 barrels of oil, which means oil is massively underpriced. For whatever it's worth. I have only ever lost money in the stock market, so don't listen to me. From Times of India, co-founders exit Elon Musk's XAI. Jimmy Bond, Tony Wu resigned from XAI amid technical tensions and merger talks with X and SpaceX. It sounds like they got pushed out. What's interesting about this to me is bet money you see something like a, bastard hybrid cousin company emerge from that, which is probably going to be worth paying attention to. Because anytime founders like this have an opportunity for a second at bat, they always do it better. Oh my goodness, forgive me. Niv Bavarsky reports Spotify has record user growth and 15% stock pop. Spotify added a record 38 million new listeners in Q4 with monthly active users rising to 751 million. This matters because of the demonstrable impact that AI integration has had on Spotify. Spotify is one of the few companies that's actually showing us how to use AI in real time. So if you're interested in seeing AI integration impact the bottom line of a company, go watch Spotify. They're doing a phenomenal job. From Axonius comes a story. CEO transitions to executive chairman. This transition signals a company's readiness for a liquidity event or a long-term strategic shift, which basically means they're about to play, pump and dump. I read that there's $3.2 trillion worth of M&A money sitting on the sidelines, just dry powder, waiting to put it out. So if you're, anywhere near approachable from an M&A perspective, which really means $1 million EBITDA, by the way, then might be time to start polishing up your PPMs, which is an acronym for private placement memorandum. I learned that the hard way. SMBs prioritize profitable growth over hiring from SMB study. Driving profitable growth has surpassed talent retention as a top business issue for 2026. The market is no longer rewarding growth at all costs. Founders must focus on unit economics and tech efficiency. Those are my stories at 10 minutes. Oh, thank you for putting up with me. I know I'm sick. I really appreciate all of you who showed up live. I see Staycon. Staycon says the club isn't the best place to find a lover, so the bar is where I go. Thank you for that insightful comment. Enriched us all with your thoughtfulness. You should be a English pop star. LaVerge Amanda says, committed to showing up, sore throat and all. Yes, ma'am. I'm doing my best. Salvador, thanks for being here. Marriage. I know I should know how to say your name. You show up a lot. I appreciate you, whoever you are. Camilo, what's up, buddy? Ads with Solik. Shoebox Moses, blatant disregard for progress. Sorry, California. From where we are, and Wilkerson Customs. I'm here, your biggest fan. Is that Tom Wilkerson? Who are you? Wilkerson Customs. Whoever you are, I love you. I'm your biggest fan. As promised, I go live every single day at 6 p.m. Eastern to give you what I think is all of the news relevant to small businesses that have happened in the last 24-hour news cycle. If you want to stay caught up, if you want a sigh of relief, tune into the Daily Sigh. You can go to dailysigh.ai if you'd like to subscribe and get these delivered to your inbox daily and or weekly. I promise that I'm not going to be sick for the rest of my life, hopefully, God willing. But stick around. Oh, it's Nate Wilkerson. What's up, brother? I'll see you tomorrow, 6 p.m. Eastern. Peace.